All right, good afternoon, traders. Welcome back. Hope everybody had a safe and happy holidays. For those celebrating, I'm glad to be back into the action, although never really taking the pulse off of the markets as they're almost continuously trading. We've seen a lot of volatility over the last couple of sessions, up over 5% yesterday. I believe it was the single largest gain ever in market history. And now we're reversing course today, down about 2%. So a lot of volatility. We remain on the sidelines in the equity markets for our service at the time being, just to allow for some of this volatility to die down and allow for some of the larger market participants to come back into the market to hopefully help stabilize the equity markets. But we are active in the commodity markets. One benefit for trading commodities and currencies is due to the non-correlation of the broader market indices. And we're looking at a couple of trades in the currency complex today. Our 3S code indicator scanner had picked up a new long trade in the British pound and also a long trade in the euro currency. Seasonally, we can expect to see some strength going into January and February in these two markets. And as expected, you would see weakness in the dollar index. So this is UUP, the bullish U.S. dollar index fund, which of course is trading to the downside as it is inverse from the pound and the euro. The euro is a little bit stronger today comparatively to the pound. We are long both markets in futures options, and ETF options. The euro is projecting an approximate move of about 250 points to the upside. That's good for about a $3,000 move if you're trading the standard contract. If we crunch the market in and draw a simple Fibonacci retracement from this last major swing low back in January 2017, we're likely going to see a 61.8% retracement. And notice that is right to our target level around the 117.40 to 117.50 level. Now, we're probably going to come into some resistance here at the 200-day moving average. That's okay if we position ourselves accordingly. And then in the pound, if we do the same thing, we draw from this last major swing high to this last major swing low, probably going to come up and see a 50% level retracement, which should take us right into that 200-day. However, our initial target is about 235 points to the upside from 127.25, which takes us to about the 129.60 to 129.60 level. That's good for about a $1,450 to $1,500 per contract move. Each tick in the British pound is $6.25. Each tick in the euro currency is $12.50. Regardless of whether you're an equity trader, a futures/commodity trader, or a currency trader in the Forex market, this setup, this trade could be taken in all markets. For our equity traders, we have bull put spreads in FXE and FXB respectively. For our futures and futures options traders, we're long the currencies with covered calls. We're also short put credit spreads. And then for the currency traders, you simply get long the Euro USD cross pair or the GBP USD cross pair. So just another example of a high probability technical trade with high probability season analysis. Trade well, stay seasonal, and we'll see you on the inside. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.